Alright guys, welcome to another video. It's been a while since I made one of these, but it'll be a combination of an update video and updating live and update on the chart. So starting off with what I think is the most important part to cover, which is the Trade Smart series, if you guys know of it, because I think many of you ended up joining the Telegram group from the Trade Smart series, where I covered basically how to make ends meet, not really looking to make the most money out of the market or to be greedy and try to yield as much income as possible, but it's literally just making ends meet, paying necessary bills and things like that. I wanted to cover something critical for that model. I know this is basically going to be a video that opposes my points in those videos, but it's part of growth, right? It's part of life, it's part of the changes that comes with it. And in that video, I tried as best as possible to make it sort of like a 5-step plan to take, check boxes to tick off in order to take or execute a trade, right? And based on these mechanical decisions that you would make, or these step-by-step decisions you would make, you should be able to make enough profit to make a living or to make ends meet, right? After some time, I realized even myself, I don't necessarily trade that model. I mean, yes, I do trade it sometimes, but not always, and it's not even the model that made me stick to ICT's concept. It's not even the model that basically introduced me to proper profits in these markets, right? Because at the time, back in 2023, I was actually trading just the 2022 model, and I was actually just trading the 2022 model during the New York session and only on the 5-minute chart. So I'd literally wait for a liquidity sweep of the previous session, I'd wait for a basic market structure shift, I'd wait for a pullback into the 5-minute fair value gap that was made, and then target the opposing high or low, right? This was basically the model that I traded and the model that yielded me the income that I have now. So for me, for me to make the video and say this is the model that I believe would that makes the most sense and that would help you make ends meet, isn't really fair, because I didn't even make my ends meet that way. And yes, I know now I am, but that time I didn't. So in other words, I'm trying to say that it doesn't really matter what you trade. It doesn't matter if you flip a coin to decide whether to buy or sell. At the end of the day, all that matters is that you, out of your own experience, manage your money properly, manage your risk accordingly, and evaluate each trade properly. So that's where journaling comes in, right? So it's literally just that. Manage your risk, manage your money, and journal your trades. That's literally the secret to these markets. There's nothing else to it. There's nothing more to it. And yeah, as long as you do that, you'll be fine. So this is me basically saying, this tweet that you can see right here, this was on February 20th, right, 2025. This was some time ago by Tyler Trades, and at the time I remember seeing this post, and I thought to myself, that's actually true, because if we had 100% mechanical edge, if we had something that we could follow step by step to make money, that's basically the same as just trading patterns, right? Because a pattern is looking for a specific thing to show up on your chart and then wait for some other thing to form before taking a trade. That's basically a pattern. And as he said, if pattern trading worked long term, we'd all be rich already. So I don't believe now in anything that's 100% mechanical. Of course, we do have a step-by-step approach to follow, especially if you're looking for structure in your trading. but it doesn't have to be 100%. So that could be 50% of it, because the rest of it could be experiential knowledge, if you want to call it that. It could be sentimental analysis. It could be fundamental analysis, adding to your mechanical edge. These things combined should be the thing that makes you your money in these markets, not really anything else. So anyway, pushing aside that 5 minutes random ramble at the beginning of the video, which I know most of you probably won't like, and will probably click off away from the video now, I am gonna move into what I'm expecting. I know today is NFP Friday, so I'll be pointing out what I expect to see today and the coming few days. Let's start off with the dollar index. You know, we've usually started off with dollar index. Actually, let me see if my chart is still populated or if it's blank now. It doesn't matter much, but I just want to see. I'm gonna move back again to the yearly time frame for something important. I haven't looked at the yearly chart in a long time, but I know there's something that I've wanted to cover from last year, and I think we're going to be able to see that clearly from the yearly time frame. So let's remove all these lines, and we can see exactly what I'm talking about. We have this yearly gap, this yearly BC that we targeted last year and never actually managed to get there. So look at this gap here. The space between this candlestick's high and that candlestick's low is called a fair value gap, and that is that's in the form of a buy side imbalance, sell side inefficiency. That's why it's called a BC, right? It's a bullish fair value gap where we have a space right there. This is the target. This is my drawn liquidity right now. As we can see, the year opened up here. We rallied up a bit, creating a top wick, and now been heavily bearish, and we haven't even gotten to June yet. So half of the year is still not even there yet, and there's a high possibility that we could tap into this yearly gap, then reject and start pushing higher the remaining half of the year. Very possible, but for now, step by step, right? The first step is to get into this yearly gap, and I believe this is where the dollar index is drawing to. I don't care to know what the news is saying. I don't care to know what sentiment is saying. I don't care to know what people believe or whatever they might be having in mind, but I think that we're going to reach these 100 level on the dollar index, or specifically 99 level on the dollar index. So this is what it looks like on the 3-month chart, and this is what it looks like on the monthly chart. As you can see on the monthly chart, we opened up in the year right there. We rallied up a bit and then been bearish month after month after month. After doing something significant here, which is just a liquidity sweep. The liquidity sweep happened last year though, but we can see we need a top wick before we continue lower. So we got the sweep now. This is an accumulation, this is manipulation, and I believe distribution is what's happening right now. We have now successfully disrespected this monthly BC. We closed below it. The new month just opened now. We are literally on the 4th of April, and already we're extremely bearish. I would actually like us to continue being bearish even this NFP. I know usually when the week has already expanded as much as it has, because if you look at the daily chart, right, removing this purple area because we don't need that right now. That's just a disrespected gap from the monthly time frame. Doing that, we can see already the week has just opened up and has been expanding. So that's Monday the 31st, and that's Tuesday. Then we went into April. We just started plummeting downwards, and even now I know that we've had a big expanded or big ranging day yesterday. Today just opened up now. Usually we would expect a small ranging day, but because it's NFP, we might expect some level of volatility, you know, but I would still like to see dollar fall off. This is not yet a CB, because some people might say, well, what about this fair value gap between this candlestick's low and that candlestick's high? Well, the day hasn't closed yet, so we would be able to see if this is a CB by the end of today. So basically this could be a possible gap to watch for next week. So if let's say Friday ends up just ranging, chopping around, not doing much, takes the previous daily low and then comes back in the range or something like that, doesn't really do much, then there's a chance that Monday could come, pull back into this gap, then continue lower. There's a high chance of that happening. So something like that, tap into the gap, then falls off to the yearly BC. Very high chance of that happening, but for now we take things step by step by step, right? And the first step that I'm seeing, or the first thing that I'm watching for, is the weekly chart showing me the same thing that we just saw on the monthly: liquidity sweep, displacement, and now watch how, look at how price came into this gap, barely tapped it. We tapped it once, 3 times, and then this week literally opened up and decided to melt off. So this to me is very clean price action, very clear directional movement, and I believe we're reaching this sell side liquidity at 99.578. I don't know if it's gonna happen this week, but anytime between this week and next week. For me personally, as I've already said, I'm very bearish, at least for now. After we tap into this yearly gap, we would be able to reevaluate and see where the dollar could expand to next, or we could move over to move over to foreign to exotic pairs. For now, that's what I'm seeing, and that's what I'm expecting. Of course, if we shift to the foreign currencies like Euro dollar, GBP USD, and any other foreign currencies, it will be the exact same evaluation. So let's see, for example, GBP USD failed to tap into this area, into this gap on a higher time frame, right? Because that's the gap there on the monthly chart, creating this SMT divergence between euro and pound, because euro did tap into that area and yeah, GBP didn't. Since then, we've just been expanding and we've been leaving gaps open. We left this gap open, we're leaving this gap open. On the weekly time frame, it's a little bit clearer. You'll see here that we actually left this fair value gap open right there. The space between these candlesticks low that are just delineated now and that candlestick's high, that's a fair value gap, right? A bullish fair value gap. Notice how we just left it open, but when we switch over to euro dollar on the same time frame, on the same weekly chart, you'll see that we actually tapped it very clearly over there. Let me try and draw out something that would be visible. I'm sorry for the loud clicks, but I'll try and silence it as much as possible in post. So yeah, we have this massive BC, this massive bullish run to the upside. We tapped into it while GBP USD didn't, so that created the SMT that I needed to confirm my bullish bias. I actually took this trade on the daily time frame. I waited for us to close above this last down close candle. So notice that this down close candle is the one that tapped into the weekly time frame. I waited for us to close above it. We closed above it right there. When price retraced to it, I used it as an order block, right? Something like that. Stop loss at the swing low, and I was targeting those relative equal highs that we saw on the weekly chart. So this is a massive 9-hour trade, but it's on a daily time frame, so it's definitely a swing idea. So yeah, this was the idea that I had in mind. For those that missed the relative equal highs, let me just show it again. It's these highs over here and that buy side liquidity over there. So that's where I believe the price is going to draw into. At least get to these highs, at least get to these equal highs here. It's not to get to that buy side liquidity if it doesn't want. So that's my expectation, and let me see if I can send a screenshot here quickly. I'm just gonna paste that in like so and hope that it shows what I'm trying to show. So that's euro dollar on the daily time frame. That's the order block I'm talking about right there. About that, and now I'm looking for expansion. This screenshot was taken yesterday, but you get the idea. It's basically the same thing. If we switch to the daily time frame, we should be able to see what I'm talking about right there. That's the order block. But my stop loss is now at break even, and now we're expanding higher. So yeah, I'm looking to see the 1.2758 level to be tagged, or basically 1.13 if we want to round it up. I still don't know when. As I said, just like the dollar, could be this week, could be next week. I'm willing to watch and see. So yeah, that's my expectations on euro. The same goes with GBP USD, of course, because I mean they are correlated pairs. GBP USD does seem to be creating some sort of resistance, after tapping into this premium gap right there on the daily time frame. It seems to be rejecting a bit, but I expect it to just push back up again. Let's go down to the 4-hourly and hourly. Yeah, I mean, any of these down close candles could be used for buys. I mean, look at this white candle. That's an order block, white candle, order block, white candle, order block. So if price comes down to this order block, we could reject higher. If it comes down to this fair value gap and order block combination, we could reject higher from here. But I'm expecting higher prices on GU as well as EU and any, of course, every other dollar pair like NU and AU and all of them. Of course, best to always pick the stronger one. I mean, look at NZD, for example. We just took that buy side liquidity and decided to melt off from there. So be selective with the pair you choose and be careful with the pair you play with. I'm just gonna put it out there. You don't just go out there gunslinging and hoping for the best in your trades. Actually have a reason behind your trade ideas, and yeah, take your trades. For now, I believe that's all I have. On the indices, I don't really have anything clear. I've been looking to see if I see anything clear on the indices, but I don't see anything. Right now we seem to be drawing to that sell side liquidity, but I don't see any entry to take for that. I don't see any I mean, looking at the 4-hour chart, we don't even have any 4-hour CB in this leg down. We just, I mean maybe this, if this is a gap, it is a gap, but not really the best, not really the most convincing one. On the hourly time frame, we do have the same one here, but we've already tapped into it. So maybe liquidity we might get something like this. Let's just watch for this solid down close candle and up close candle right there. Price could retrace back up to there, then decide to continue selling off if we're gonna remain bearish. Again, nothing solid, not the best trade idea for me on NQ and ES, but something to watch out for. I mean, literally we left the same gap open on ES, so that's already considered as some sort of SMT for the sales that happened during Asia, right? We got an SMT inside of a higher time frame PDRA. Then of course you go down to the lower time frame, which is like the 5 minutes, 3 minutes, or 1 minute, right, to look for confirmations to sell. And we've already gotten that sell. Now London is opened and we're getting a bullish expansion. Are we going to use the same gap again, disrespect the SMT, and then continue lower? I don't know, possibly. We could do that, but also at the same time watch out for the possibility of price just completely rejecting the move that has happened this week and decide to start pushing to the upside. On gold and silver, I think you guys have seen my bias already. I sort of teased that at the beginning of the video, so if you haven't, just go back to the beginning of the video. And yeah, if you got to this point in the video, firstly I would like to say thank you for sticking around. I know it's a long 17-18 minutes video, but I'm grateful for your time. Actually, I'm grateful for your time, and I'm grateful for you. So thank you. And if you don't mind, just tickle the like button below. Just click on that like button, and of course while you're there, we could just subscribe. I noticed a larger percentage of people viewing my videos don't actually subscribe to the channel, so it'll be cool. It'll be a cool little thing. So yeah, just subscribe while you're there. I hate these ads. But yeah, that's my view on gold. I'm not gonna zoom down because it's gonna show my analysis, but it's for a clue. It starts from the daily chart, and then I went down to the hourly chart for confirmation. So if you want the clue for gold, silver, I don't really have anything clear. I still have that monthly buy side liquidity. I say monthly just because it's easier to see on the monthly chart right there. It's not the all-time highs, it's just this high right here. I'm looking to see if we can somehow target anytime soon, but we can see how heavily bearish silver has been. And you would think this move happened in the entire week, but no, it just happened yesterday. It's literally yesterday's bearish candle that did all the damage. So there's a chance, a possibility that this down close candle somehow could push price higher, but that's an extreme, I don't even know if I'll call that an order block, but it's an extreme low. It's the last line of defense, let's just put it that way. It's the last line of defense for price to push higher. Before that, we do have a gap, a BC right there that we've already tagged into like that. So there's a chance that price could reject from this. If it does, that would be incredible and that would be crazy, but very possible, right? Everything is possible. This could just be to convince people that we are now bearish. Everyone is all freaking out and wanting to sell. That's the natural human behavior, right? Wanting to sell, but this could be the place that price decides to stop this specific gap, then decide to start forming bullish structure, especially on the lower time frame. So just pay attention to the hourly chart and 4-hourly chart. When we start closing above these, let's say we close above all of these down close candles, this is the highest one, right? Before we start getting something bullish. If we somehow displace above this, close above it like that, then of course there's a higher reason to have behind wanting to retrace and buy it up, right? It's not guaranteed. I'm not saying this is a trade idea. I'm not trying to give any sort of financial advice. I am not certified for such. I am not a professional, and I'm in nowhere in no position to be telling you what to do with your money and your learning, right? So yeah, if you have anything else you would like me to cover, please let me know in the comment section. I have not checked the comments for about 3 weeks now, so I'm gonna catch up after this video. But for now, stay safe, good luck, and as always, good trading.